Hello everyone, welcome to my channel that is Learning Sarathi. So today we are going to learn about prepaid expenses. So prepaid expenses are the expenses paid in advance for the goods or services they will receive in the future. So prepaid expenses are the expenses which the business are going to pay in a current accounting period, but goods and services they will receive in next accounting period. Okay, for example, prepaid insurance and prepaid rent. For example, business has paid insurance like whole year insurance premium at once. Like say business has paid insurance for January to December in the month of January for 12,000. Okay, so those 12,000 rupees are the prepaid expenses. Business has paid the amount in advance, but the benefit they are going to receive from Jan to December. Okay, for January month it is a prepaid expense. So what is journal entry? Journal entry is prepaid expense account debited to cash or bank account. As we are going to pay the cash in advance, the cash account will get credited and prepaid expense account will get debited. We have not yet received any goods or we have not yet received any services, but we have paid the cash. So entry will be prepaid expense account debited to cash or bank account. And in next accounting period, when we actually get the services or when we actually receive the goods, in that case entry will be like prepaid expense account will get reversed and debit will become credit. So entry will be expense account debited to prepaid expense account. Okay, initially entry was prepaid expenses account debited to cash or bank account and expense account debited to prepaid expense account. Okay, so for example, say prepaid expenses like we have paid the rent, whole year rent in say January. Okay, we stay in a rented property and rent is monthly, it is around, for example, monthly it is 1000. Okay, for example I am saying, so we have paid whole year, we are going to stay from Jan to December. Okay, and total annual rent will be 12,000 rupees. We are going to pay whole amount on 1st Jan in advance, that is 12,000 rupees. Okay, so then what will be the entry? So for 1st January, as we have paid rent in advance, entry will be prepaid rent account debited. So what is the amount? 12,000, as we are going to pay in advance 12,000, and we have paid, suppose, cash to cash account debited 12,000. So okay, and on close of the month, that is on 31st Jan, the entry will be like rent account debited 1000 rupees, because per month rent is 1000 rupees, to prepaid expenses. We have already paid the amount in advance, so this amount will get reversed for the January month to prepaid rent account 1000. And for entry goes like this till December. On 28, suppose February, same entry, rent account debited to prepaid rent account. So amount will be 1000. Okay, as you go through January to December, prepaid rent amount will get reduced. See, it is initially prepaid rent was 12,000, we have debited because we have paid the amount in advance, and as the month goes on, we are crediting prepaid rent account. Okay, in January we have credited 1000, in February we have credited 1000. So till December we are going to reverse out the prepaid rent account, and prepaid rent account and this debit and credit will get like plus minus will get removed, and only the entry that remains is rent account debited to cash account finally. Okay, This is the prepaid expenses account. So in nutshell, prepaid expenses are the expenses which the business pay in advance for which they receive goods or services in the next accounting period. Okay, and prepaid expenses is treated as current assets in a balance sheet. I hope you understood about prepaid expenses. If you have any doubt, you can post in the comment section below. I will try to answer your questions. And yeah, let's meet in the next class. Till then, stay tuned. Please like, share my video and subscribe to my channel. Thank you so much. We'll meet in the next class. Bye bye.